Hello and welcome back to the channel. My name is Wajaha and today we are doing another deep dive. This is going to be a long one, so as always make sure you sit back, relax, grab yourself a cup of tea, make some notes if you want to. Today we're talking about Olympus. So yeah, I thought we'll just jump straight into the presentation. Olympus is something that's been around for a long time, and for those of you who have been following me for a long time, you'll know that I actually have talked about Olympus on the channel before. But they've made quite a lot of changes, and I think Olympus and its token OHM are pretty innovative now. And I thought, let's just do a deep dive. Let's really dive into everything that you could possibly need to know about Olympus, what they're offering, and we're going to cover lots of different things here. So first of all, kind of something to do with a digital reserve currency. We're going to cover that as well, and kind of what Olympus is, its history, and then lots of things regarding Olympus in its current form with its treasury, something known as range-bound stability, bonds, loans, governance, farming opportunities, and a few other things as well regarding its future. So again, we're gonna cover lots of stuff today, so make sure you've got some time to watch this video, yeah, let's jump straight into it. So the first concept that we're going to really talk about is the idea of a digital reserve currency. Now, in crypto and specifically in DeFi, we need currencies, stable currencies, I should say, and that's because we have so many different categories in DeFi now. We have things like DEXs, you know, the likes of Uniswap, perpetuals with GMX, options with Lyra and Dopex, lending with Aave and all these other protocols, bridges with Stargate and whatnot, liquid staking derivatives, which are the heat, the fire of the market at the moment, synthetics, insurance, real world assets, leverage farming, payments, and so much more. And when you've got so many complex products, you can't really be using Bitcoin and Ethereum as an exchange of value. You need stable assets. You need something like USDT, USDC, DAI, Frax, stable coins. And that's pretty much one of the reasons why stable coins have been so important and have been growing so well. They are, in my opinion, the one product market fit that crypto and specifically DeFi has. The issue regarding these is that the stable coins that we have today are almost certainly fiat backed. There are obviously a few that aren't, but the majority are, and the majority of those are mostly US dollar backed. And we know that fiat as a whole, whether it's US dollars, whether it's pound sterlings, euros, the yen, the rupee, whatever currency we're talking about, they have issues, and the issues are, of course, inflation takes that inherent value to zero over time. Fiat is going to die, the money printers keep going brr, and their purchasing power is going down to zero. And you can see that, you know, this picture just really demonstrates some of the important currencies that we've had over time and how their time flies and kind of goes back very quickly as well. Most of the stablecoins that we've had today have almost all depegged at some point in time, so they haven't really held their value at all points of time. I mean, recently we had the USDC depeg, which also resulted in DAI and Frax and various other stablecoins depegging. USDT has depegged in the past, and we've had the colossal failure of things like UST as well. Obviously with USDC, we're trusting on the banking system. It's not really DeFi, is it? And the other aspect is that sometimes these fiat currencies or fiat stablecoins do have quite significant difficulties in kind of on and off ramping, and as a result, all in all, this means that stablecoins still today, whilst they do have product market fit, in my opinion, they have a number of issues, and we do need some sort of alternative to fiat-based stable assets. And that's pretty much where Olympus comes in, and that's because Olympus have their currency called OHM, which is a digital reserve stable asset. So OHM is basically serving this need that the market has to bridge the gap between fiat stablecoins and volatile crypto assets to provide this kind of stability that we need for all the different DeFi kind of services and categories that we use, whether that's your DEXs, your perps, your options, insurance, real world assets. There's so many things going on in DeFi nowadays, and OHM is trying to basically serve as this medium of exchange with price stability. And we're going to talk about kind of the properties that OHM have in order to enable this, whether that's from some various algorithmic operations, and also something known as range-bound stability, and we're going to talk about that later. Essentially, the point I'm trying to get across is that OHM is trying to solve these issues, and it's able to do this via some of its properties, and we're going to talk about them shortly. Now, OHM is actually backed not by fiat, but by a number of digital assets, 50 plus in fact, many of which are in fact yield-bearing. Before we go into that, we're just going to kind of look at some of the stats regarding OHM today. It's currently got a market cap of around 220 million, but by the time you're watching this video, it may fluctuate somewhat. Current supply of OHM in the market is 21 million, but there is a total supply of 28 million. But this can increase over time because there's no hard cap for OHM. It can inflate and obviously increase as scalability. I say scalability as it needs to scale. So that's a good thing. And what actually backs OHM? Well, it's currently got $241 million worth of assets backing it. And you can see from this picture here, the blue line here represents the OHM backing, the liquid OHM backing, and the purple line represents OHM's actual price. So essentially what we can see is that there's more backing in dollar terms for each actual OHM that is available. Now, if you actually look at fiat assets, they have fractional reserve backing. So in reality, well, banks use fractional reserves. In reality, fiat currencies are not really backed by anything at all. And where we do have stable coins like USDT and USDC, you'll find that in the majority of cases they have a kind of one-to-one backing, but here in OHM we have slightly higher backing, and we'll talk about kind of the assets that back OHM as well. So essentially that's the point that I wanted to make today, that OHM is not backed by any one specific asset. It's not pegged to anything at all. So you can see that OHM's price in this picture is $10.31. It's not pegged to anything. It's not pegged to the dollar. It doesn't have to be at one specific price. It achieves price stability by a number of properties, and we're going to talk about that pretty soon. So before we do so, let's just talk about OHM's history. Because if you look at the chart of OHM, you'll see that OHM as an asset, this kind of stable asset, actually used to be over $1,000. And OHM actually launched in 2021, and they had this incredible product that was all revolved around protocol-owned liquidity, and they were in this huge growth phase where they essentially just tried to grow their treasury as much as possible. And essentially what they did was they offered these bonds that users like you and me could go and we could basically deposit DAI and basically get some OHM after a few days based on the amount of DAI that we deposited. And then what we could do is we could stake this OHM and we could earn a ridiculous APR, which was hopefully kind of balancing out the increased emissions of OHM that we were getting. So it was incentivized really by a really high inflation. You would have seen this meme going around 3-3, which kind of was this game theory concept about what you should do with your OHM tokens. Unfortunately, because of just such high inflation and of course the market not really being in the best of conditions, especially as we entered towards the end of 2021, OHM holders pretty much got burned, and you can see the price of OHM really drastically going down over time. Of course, this was balanced out by the OHM stakers earning a ridiculously high APR, so I'm sure it wasn't exactly a 99% drop, but it certainly was a big drop. They didn't announce version 2, which included on-chain governance and some upgrades to the bonds, but only recently did we see the launch of version 3, and version 3 is pretty much where all the exciting stuff happens, and that's pretty much why I even came up with making this video, because of the concepts that came through version 3, being range-bound stability, the ability for OHM to go cross-chain, reduction in the staking rate, and further bond improvements. And V3 is really the game changer for OHM that has, in my opinion, made it an asset that can not only just be scalable but also stability, and stability being the key thing here. Here's just a picture of the 3-3 thing that the meme that was going around when OHM basically came out. You could do 3 things with your OHM. You could stake it, you could bond it, and you could sell it. And essentially the idea was you should stake and obviously get the highest reward. Long time ago now, it feels like this was 2 decades ago, but Here we have a picture of me. Sorry, I've just got something in my eye there. Here we've got a picture of me, or a video that I made a long time ago. Don't watch this video anymore because it's outdated. But you can see here that in this video I was showcasing you various different ways to make passive income. In hindsight, this was a very bad idea, and this is why you shouldn't just copy everything that I do, because there are so many risks with everything. And you can see here that staking OHM was earning you 5,254%. And you can see at the time there was $2.3 billion deposited in OHM. You know, 2.3 billion, that would put it in the top 10 apps right now in DeFi. So OHM was huge at the time. And you can just see, just from this video, like I was talking about DeFi Kingdoms, Tomb Finance, Mirror Protocol. And this just basically tells you that things in DeFi changed so drastically that things at the time, which might sound really interesting, really innovative and really cool, don't even last the test of time, and most of these don't even really exist anymore. OHM fortunately has changed and does still exist, but its form is very, very different to this, which I talked about in this video a long time ago. This might have been 1 or 2 years ago, so it's been a long time. So let's talk about the OHM Treasury. So we talked about OHM being backed by a variety of assets, 50 plus assets in fact, and the Treasury consists of all of these assets, $241 million worth, and all of these assets actually are the intrinsic backing of OHM. So what do we actually have here? Well, if we take a look at the holdings, which we can see from as of mid-March, when I actually started to put these slides together, we've got DAI, Frax, the Frax base pool, and we've got protocol owned liquidity. So we've got the OHM wrapped ETH liquidity pool tokens, the OHM DAI liquidity pool tokens, DAI wrapped ETH, Convex, LUSD, basically a variety of tokens. And as you can see on screen, this goes down to FXS, Aura Finance, Vesta, wrapped Bitcoin even, and then a few kind of smaller assets here with, you know, redacted cartels, Butterfly, Frax, USDC, etc. Now, the main composition essentially of OHM consists of pretty much everything on this first page, and you can see that we have DAI, but it's not just plain vanilla DAI. It's actually DAI deposited in dynamic stability regime or something like that. Basically, DSR is their stability mechanism, and obviously this earns income, and so this $71 million is actually going to hopefully go up in value with DSR. Similarly, with the Curve Frax base pool staked in Frax, this $58 million is going to be earning maybe 3 or 4% a year. So ultimately, this treasury is a productive treasury that is growing, yield-bearing assets. And that ultimately means that the treasury is growing, the backing of OHM is growing, and that should allow OHM to grow, not potentially in price, but in market cap. That's ultimately what we want. OHM Olympus, I should say, were one of the pioneers of this idea of protocol owned liquidity, and they basically came up with this idea that renting liquidity, which is basically what happens a lot in DeFi, is not a good idea, and owning your own liquidity, owning part of it in your treasury is a very important thing, and that's what they do here. So a lot of OHM is actually owned by Olympus themselves, and they actually pair this with wrapped ETH and DAI, which of course earn them plenty of fees, trading fees, farming fees, and all sorts, but allows them to retain that power by owning some of that as well, and of course additionally having some extra income. And you can see the category here will basically tell you all the different assets, volatile assets, stable assets, and whatnot. And the whole idea is that we should basically have a decentralized stable asset here that's not just basically backed by one asset, whether that's Frax, you know, that's just backed by USDC. We should have something that's decentralized and diversified. Diversified is the word I was talking about. So we've got stable coins, we've got volatile assets, we've got a bunch of different things. Now, there are some limitations here. For example, I do think that there is a heavy reliance on DAI, USDC, and Frax. You know, $130 million. So pretty much almost more than half of the treasury assets is in those three stable coins. We want that to change over time. Of course, we're going to want to have maybe wrapped Bitcoin or wrapped ETH to have maybe a significant, more significant portion, but also perhaps a variety of other assets as well. And I think generally over time, the more diversified and the more decentralized that this treasury can become, the better it is for Ohm. But it is a work in progress, and I think at the moment they're doing a pretty good job with it. So yeah. Now let's talk about the most important thing about Ohm at the moment, in my opinion, and that is range bound stability. How does Ohm retain its stability? Well, here we've got all the answers. Ohm trades in this kind of range here, and this range is RBS, and with this range bound stability we have two mechanisms here. We've got the kind of upper cushion zone over here, and we've got the lower cushion zone here, and price is basically meant to trade in between these zones without interference. So Ohm is not meant to be pegged to anything. It's meant to be stable, but to a limit, and that's because it's meant to trade within the price zone of this upper limit and this or this upper cushion zone and this lower cushion zone. And we'll talk about some of the mechanisms that are in place that happen at each of these cushion zones whenever the price reaches there. So when the price of Ohm reaches the lower cushion here, so kind of if a lot of Ohm is being sold off into the market, well, there's these automatic market operations will essentially, these smart contracts will go and buy Ohm off the market and burn it. And of course that results in a reduction in supply, and that obviously buying pressure as well will hopefully get the price of Ohm back up into this kind of middle range as well. And similarly, when the price of Ohm reaches this upper cushion, more Ohm is minted and then sold onto the market to obviously reduce the price. So ultimately we've got these two mechanisms in here to basically keep Ohm within this range. Now you might be asking, where are the funds coming from? Well, they come from the treasury that backs Ohm itself, and a certain amount of it is used to basically utilize these buying and selling operations to keep Ohm within this range here. Now they actually use something known as a sequential Dutch auction system, and this essentially offers a dynamically increasing discount on Ohm tokens until someone executes a swap, at which point the discount resets and continues to increase until the next swap order. And as long as the token price remains within the cushion zone, these AMOs are going to continuously occur to either buy or sell Ohm. So you could kind of basically say that these kind of walls. Hold on. When we get to these walls, which is this kind of darker green line over here and this darker red line over here, these are called the walls. So we've got the kind of cushion zone here, but then we've got the walls. Now the walls are more like market orders where arbitrageurs can trade directly with the treasury to buy and sell Ohm tokens at the stated kind of wall prices. And this is quite an important thing in order to keep Ohm at a stable price within these, to try and basically keep it within the cushion zone. Now when you actually go to Olympus, you'll be able to see all of these metrics, and you'll be able to see that there's a number of die allocated at the upper wall, upper cushion, lower wall, and these are the prices here that you can see here. Now there are a number of Ohm and a number of die that are allocated at each of these, the upper capacity and the lower capacity, and this is essentially the reserve factor which are deployed in the cushions on the walls to ensure that there's sufficient liquidity to protect the token price without risking draining the entire treasury. Now if the cushions run out of assets, then there's going to be a 6-day window to reinstate funds into the RBS system, which will re-engage at the newly found Ohm price. So yeah, that's important to know. And if the price of Ohm exceeds or falls below these two cushions, then we do have these bond markets appearing, which are these instant swaps with no vesting. And the RBS system will use the 30-day moving average of Ohm to determine what the target price for Ohm is going to be, which is basically how the upper and lower cushions are set for the RBS system. And the spread from the target price from either cushion is currently around 7.5%. So here you go, here's a picture that basically demonstrates this perfectly. Ohm, as you can see in the picture, is in the green zone, and that green zone essentially means that part of these assets here, so this die, this 6 million die, is going to be used to buy and burn some Ohm, and that will hopefully get this price back into the range here, with the target price being the 30-day moving average at $11.09. Yeah, that's pretty much it there. And yeah, you've got the upper wall, the lower wall, and then the cushion zones as well. These AMOs are constantly working to kind of rebalance and make sure that OHM is trading within this target zone. These AMOs have been working really well. They've been able to keep OHM stable, and since RBS has come out, OHM has been very stable, only trading within these two cushion zones. Now let's talk about bonds. There are a number of different bonds that Olympus offer. Reserve bonds, which sell OHM at a discount to acquire treasury assets. So these are typically used in bullish market conditions to help stabilize OHM, but also accumulate some of the profits into the treasury. Inverse bonds, which probably are going to be more active at the bottom of the range, and they basically sell reserve assets, generally US dollar stablecoins like DAI, in exchange for OHM, and they are basically used to help increase the price of OHM. And unlike reserve bonds, they vest instantly and are pretty much the core mechanism for absorbing sell pressure from the market. We also have two other bonds that are less common in my opinion, but still important to know about. OHM bonds, which sell OHM for OHM, and the purpose of this is to transition away from gOHM staking, which we'll talk about shortly. And there's also liquidity bonds, which are similar to reserve bonds, except that they bond in LP tokens issued by the AMM. These bonds are used when there's a need to accumulate more liquidity. Now, let's talk about these liquidity vaults, because this is a pretty interesting new concept that Olympus has come out with. Now, boosted liquidity vaults are these new vaults that users and DAOs can deposit assets. And the whole idea is that we want to really increase the liquidity of OHM as it becomes a bigger player in the world of DeFi. And this is pretty much how it works. Now, normally, let's say this is me, and I wanted to pair some FXS that I've got in my portfolio, and I want to farm it because there's some nice farms that are offering 10% APY. Yeah, I want to make FXS a little bit productive, so I'm gonna basically pair it up with some USDC and put it into this FXS USDC pool. Now, of course, if I've got $1,000 of FXS, I'm gonna also need to buy $1,000 worth of USDC, which will in total give me this $2,000, which I can earn 10% on, meaning I'll earn about $200 a year here. I've had to put in $2,000 in order to earn this $200 a year. Well, this is a way, Olympus has got a way to kind of boost these liquidity, and we're going to talk about how they can do that. So first of all, assets from other DAOs can be deposited in vaults, and OHM is actually minted one-to-one against this. Now, the asset that you have is then paired with OHM and pooled, and when withdrawn, OHM is burned. Now, that might not make much sense to you, but if we take a look at this over here, hopefully this will. Now, imagine I've still got this $1,000 of FXS, but now instead of having to buy up some USDC, what I can do is I can deposit my FXS into one of these boosted liquidity vaults, and OHM will be minted one-to-one against this and paired as a pool. And now you'll see that I've got the FXS OHM pool. Now this pool is also worth $2,000 because it was minted one-to-one, but I've only actually had to put in $1,000. So I'm earning 10% APY on $2,000, but I've only actually put in $1,000, actually meaning that my APY is actually doubled. And that's because Olympus will not take any reward from these farming operations. The main benefits, as I've written on screen here, are basically to increase the liquidity for OHM and OHM pairs, reduce the volatility for OHM, reduce impermanent loss. Partners and users like you and me can earn double the rewards, and we'll get double the TVL. We can also provide single asset liquidity, and as I mentioned, earn double the rewards. And this is a really, really innovative way for OHM to participate in DeFi, but also increase liquidity. And I think it's something that I will definitely be looking at, especially as OHM has now become a stable asset. We can compare it to the likes of USDC, DAI, and Frax. And I think this is something that's really going to go for it. Now, there is a problem with liquidity, and most of these ideas are well known now, but essentially most of the liquidity in DeFi is rented. LPs can withdraw anytime and move on to the next new shiny protocol. When LPing, most of these governance tokens are given away for free. You're farming and dumping, and I do this all the time. It's free for me, but it's not very capital efficient for the protocols who are giving out their governance tokens. And number three, protocols have overexposed themselves in their treasury to their own governance token, and we've seen this many times. You may have seen this image, renting liquidity versus owning liquidity. I think it's pretty clear here. Now, Olympus have another product here called flexible loans, and this is another way for them to basically increase their treasury, but also not have to rent liquidity. Protocol owned liquidity is what they want. So this is how it works. Flex Loans is a whitelisted product offering for protocols to grow their protocol owned liquidity through an interest-free loan against perfect collateral. Now, I've written here gOHM. I'm not sure if it's just going to be OHM rather than gOHM. We're going to talk about gOHM in a bit, but okay, just think of it like OHM. So essentially, by depositing OHM as a collateral asset, the borrower or the protocol can borrow up to 100% LTV in OHM and pair this with another token to create a liquidity pair. Since the loan is in the same denomination, there is no risk of liquidation, and the loan will lower in LTV as gOHM collateral obviously continues to increase over time. Once whitelisted by OHM, the borrower deposits gOHM into the flex loan contract with the other half of the intended LP token, and the contract then borrows against the deposited gOHM and pairs the resulting OHM with the provided token to create an LP pair at the designated DEX of their choice. And at the moment, we have Balancer, Uniswap, SushiSwap, and Curve available. Now, maybe that didn't make sense to you, but I'm going to try and explain it again. Now, gOHM is currently an asset available on Olympus that is staked and currently earns a small interest. Now, what these flex loans are allowing is for a protocol to basically buy up some gOHM, borrow OHM against it, and because you're borrowing in the same denomination, you can't get liquidated. And what you can then do is that borrowed amount, you can pair that with your own governance token, put that to work, and essentially you've got a loan with protocol owned liquidity. And as gOHM is constantly increasing in value, as it's earning staked rewards, you'll basically be paying off your loan over time. And so you can see from this picture, you've got an interest-free loan with perfect collateral with market-leading LTV. Deposit OHM, the borrowed OHM is paired with a protocol-owned asset to create an LP token, and you can deploy newly acquired LP for flex loan exchanges. You can hold deep protocol-owned liquidity backed by pristine collateral. Yeah, this is a really innovative product, and I really like what Olympus have done here. Now, I'm not too sure what they're going to do, because gOHM is an asset that they have talked about kind of depreciating over time, but perhaps they will continue to have their flex loan products. And I know there are a number of DAOs that currently are utilizing this as well. Let's talk about governance. So with the Olympus team, there is a leadership council formed with elected members. They have quarterly reports. There was 6 months check-in with the community. It's all pretty high level, in fact, and I'm very impressed actually. They have grants, education, and you can see some of the things that they're creating, like non-custody debit cards, own mobile payments, lots of built data and metrics interfaces, and lots of things. They're even building an Ethereum push notification service. Lots of things being built here, and you can go to the Discord and even see some of the policy forums that they have there. You can participate yourself directly there. And as I mentioned, they do have their own reports that they create. I believe they are in the middle of writing the Q1 2023 report, so perhaps by the time you're watching this video, that's available, and you can go and have a read there. Moving on, let's talk about some of the issues. Now, OHM is still centralized, unfortunately, and that's because it's mostly backed by US dollar stables. They do have a lot of bad publicity from the early days. OHM $1,000 all the way down to $10. 99% down in price. For the users who weren't staking, that is awful. And I think the majority of people in DeFi probably still have this opinion that Olympus is a scam, it's a rug, it's something that it's not worthy anymore, they're not building anything anymore, but that's completely the opposite. and Olympus has shown that they are still innovating and developing quite a lot, actually. The other thing is that volatility can still occur. If, for example, the price of if for example OHM is massively sold off or massively bought, it can actually go past those two cushions and then will rebalance over time as well, especially if the reserves for those cushions run out. So there is still the chance of volatility, and these are still things that I think are being worked on, but hopefully will have some fixes in the near future. gOHM, as I mentioned before, is staked OHM, is currently earning around 2.3% interest, and it is being phased out as the focus is on OHM. So we'll kind of have to see how that affects some of its products like flex loans. I'm not too sure at the moment, but it's just something to be aware of. Yeah. Now let's talk about the ecosystem. There's a bunch of different things going on here. So you've got all of the places where OHM has liquidity with Sushi, Balancer, Uniswap, SpiritSwap, FraxSwap, lots of different places there. A number of DAOs that actually have participated in the flex loan products with Redacted, Fiat DAO and Bondbridge. Some payment systems there, insurance as well. We've got derivatives, options as well. Lots of DeFi borrowing and lending aspects as well. And of course some OHM stables which can be lent on Fraxlend and Vesta. So some really interesting things going on there. And I think this is only going to grow as the Olympus team tried to make OHM a kind of key stable in the world of DeFi. The team and community the council can be seen in Discord. They've got regular community calls. I joined one of the recent ones recently. There's some really good content on YouTube with Flywheel Podcast doing a talk with some of the Olympus team, talking about
one of the most distinguished
talking about a variety of different things regarding OHM, product market fit, governance, relation with Frax and all sorts. And as I mentioned before, you can go to the Discord and kind of participate in discussions, get to know the team, get to know the community as well. They do have a few other interesting things, like they've got some they've got some t-shirts, products, clothing lines, so some few interesting things that the community have built as well. And moving on, I think lastly, let's just talk about the future of Olympus. Well, I think their goals are pretty clear to be seen. They want growth in DeFi. They want to become the most liquid asset in DeFi, and liquidity as a service is this main product that they're really focusing on at the moment. So it's going to be really interesting to see how they do that. I think it's pretty clear that they're not trying to be a currency. They're not trying to be a replacement for dollars. They're trying to become this stable reserve asset that we use in crypto, and I think they're working towards it. Let's see how they develop and get on over the next year, but it's an asset that I'm very, very interested in and very happy to actually have in my portfolio. They really want to grow the treasury, of course, and that of course makes sense, and hopefully they're going to do that with their treasury that has a variety of assets that increase in value over time. We've got the growth of the DAO and some of the monetary policies. The idea of a cross-chain OHM integrating with layer 0 is something that I think is going to be really interesting. Is it going to be a replacement for USD stablecoins? Who knows? I mean, I think trust in USD stablecoins has never been lower, especially following USDC. I think in DeFi, we probably have an over-reliance on some of these, and we do need some sort of replacement. So I think OHM can definitely take some of that market share away, and I think we'll see an increasing number of strategies and partnerships with the growth of some of their products like flex loans. So all in all, I think Olympus has a very bright future. They've got a large team with lots of people working on some of these really interesting products. I think OHM does have a number of issues, but I think it's definitely improved significantly from its version 1 and version 2 release, and I think I'm personally very excited to see where OHM goes in the near future. It's one of my favorite assets for the time being. Yes, there is some complications that I think you all need to understand with range bound stability and how these cushion zones enable OHM to trade within this zone here without obviously going past these zones, which it definitely can do, but I think once you get your head around it, it's going to be a very interesting protocol for you. So that's pretty much all I wanted to talk about. Let's see if did I have any other slides. No, that's pretty much all I wanted to talk about. We covered quite a lot today regarding Olympus, its history, how it works, range bound stability, bonds, flex loans, gOHM staking, so much more, and I hope that I've kind of clarified and basically enlightened you on some of the features that Olympus has. let's see where we go in the near future. I'll try and make some more content in the near future. And again, if anything didn't make sense in this video, if you have any questions, let me know in the comment section below. I'll try and clarify. That's pretty much all I have for you today. Make sure you smash the like button, subscribe to the channel, and of course I'll be back with plenty more content and plenty more deep dives in the near future.